Let's do some calls of the day. I do want to do Palo Alto Networks, Jason. Initiated by at Needham, $305 is the price target. It's transformed itself, they say, into a stalwart in cybersecurity. You own it.
I agree with that 100%, Scott. I mean, clearly Palo Alto has had a phenomenal year. Year to date, it's up 80%. Revenue growth last quarter of 26%. Now they guided to around 19% revenue growth and 20% EPS growth. This stock, and it's recently become profitable over the last couple quarters, but I think cybersecurity is a theme that keeps on giving, and Palo Alto plays positioned perfectly in the space.
Jenny, you own it as well, and as I note that it's down today, it gives me pause for a minute to just wonder if, because Jason mentioned the 80% year to date, whether investors are going to look at some of these huge gains on the year who are feeling a little bit uneasy about where we are and start to ring the register on some of these names.
Right. Right. I love the way Jason said, though, that it's the theme that keeps on giving, and that's exactly what keeps us in, because we look at it and we say, well, first of all, you can't really look at it on earnings, and the reason has to do with their accounting of revenues and the timing of that, but you can look at it on free cash flow yield. And for our disciplined growth strategy, which this is in, we want a 5% or better free cash flow yield. This is down to 3.4. So on every metric, it's pretty expensive, and we're constantly tempted to, well, we have trimmed over the years, but we're constantly tempted to trim or potentially sell it. And then we go back and we reevaluate the growth that there's ahead, and we know that that free cash flow is going to continue to grow in a way that I think in the whole software space is completely unique. There is, for better and worse, endless, absolute demand for network security, and these guys are the best, and they have the most diversified platform, the highest free cash flow yield within the peer group. So this is why we stick around. But it's tough when it's kind of expensive the way it is now.
Yeah. Steph, would you make the argument that Fortinet is yours, right? That's how you play cyber?
Yeah. Yes. It trades at a discount to Palo Alto. It's also lagged pretty substantially. They had a disappointing quarter last quarter, and the stock fell 20% on the day. I added to it on the day. Hasn't really recovered, but I still like the story very much long term, with bookings and billings growth in the 30%, margins expanding, and I still want to be part of and involved in cybersecurity. I think that is, I have a lot of confidence in that total addressable market and the theme for the long term. So you have some bumps and bruises along the way. I just prefer the valuation discount to Fortinet versus Palo Alto.
Let's squeeze in, Joe. I know you have Palo Alto, but I want to move off that. I want to go to PACCAR. Sure. Upgraded today at Deutsche. Best-in-class machinery, they call it. 2024 consensus too low, stock too cheap. Give me something on PACCAR.
Should have been the chart of the day instead of Texas Instruments. This is a company that's growing at 20+% over the last
Wow, that's a great looking chart today, Joe. Wow. Woohoo!
That is a stock that trades at the right valuation, a valuation that I know everyone on the panel would respect, at low teens. So it's a company that is hitting on all the fundamentals, and it's being rewarded. Shareholders are benefiting from what they're doing, and we've got people paying a premium for the stock price. We own it.